Hello, hello, hello. Welcome to this live stream. If you're here for the very first time, I want to welcome you to my channel. I do a live stream every Saturday, 10 a.m. Eastern. So you're welcome to join me every Saturday. And I just adjusting my screen so I can see you all. So I can see whenever your comments come up. It's important that I can see them as this live stream continues. Okay, so if you're here, say something in the chat box so I can know that my connections are all in order. Every week it seems to be a different challenge with live streaming, but I feel like I'm getting better at it every week with the technicals. Okay, here we are. So welcome to this live stream, and today I want to talk about exiting your trades whenever you see certain telltale signs. You know, there are two things that are important for a trader. A trader, or let me say it this way, a successful trader. Or let me say it this way, a profitable trader, to be more concise. To be profitable as a trader, you got to be able to identify the times when it's good to enter into a trade. And then you got to, at the same time, be able to identify when to exit your trades. Both of them as important as the other. Oh, good. My sound is good. Yes. Hi, Maria. How are you? Maria Silva. I feel like I've seen your name before on this live stream, and if not, let's know where you're streaming in from. Hi, Tony. How are you? Good to have you back again. Now, what I want to share today, basically strategies that I use every day. This morning, I was putting on some trades, and of course, you gotta be able to put on a trade. And they like to say that the making of a trade is on the entry of the trade. But equally, you want to know when to exit a trade. Now, I'm talking about trades where you still have your stops in place. You still have your take profits in place. But it's almost like if you're driving, these auto drive cars. I've never driven one before, but I would like to think if I am in autopilot or whatever they call it, and this car is cruising along the highway, I probably would still want to be alert and awake and watching what's going on. Because at the end of the day, I'm the human and the car isn't. And I want to be able to overrule anything that the vehicle does that may not work in my favor. The same with your trades. Yes, you set your stop loss, you set your take profits, but you also want to keep an eye on the trade. Now, there are times when I will set a trade and I'll walk away. It's just they're different, just like they're different types of people. You know, happy people, sad people, aggressive people, confident people, and on and on. So also you have different types of trades. Your trades have moods, if you like, or characteristic traits. And it's important as a trader to understand what mood your trade is in so you know how to best handle the trade. At the end of the day, you want a profitable trade. You're from the Madeira Islands. Wow. I think you're the first one I've had from the Madeira Islands. Let us know. Is that in the Caribbean? That tells you how much I know about the geography of this world. Hi, Ben from Morocco. It's good to have you. Okay, so very first thing I want to talk about, the 20-day moving average. Now, if you use a 20-day moving average, just let me know. Say yes, or say 20 EMA in the chat box. I want to know if when you are trading, do you have this indicator on your charts, the 20-day moving average? Yes. It's in Portugal. I went to Portugal once. Lagos. Well, I'm from Nigeria and we call it Lagos. In Portugal, I don't know how you pronounce it. Maybe it's Lagos. But yeah. And we were in did we go to Lisbon? It's been so long ago. Hometown of Cristiano Ronaldo. Now my son would be interested in that because I have two soccer enthusiasts who just love Cristiano Ronaldo. Let's get back to trading. Trading is so important. And this 20 EMA, okay. If you're trading without the 20 EMA on your charts, from today on, make sure you have that 20 EMA on. Check on my channel. I have a video on how to use these moving averages. The 20-day moving average is so critical, both for traders who scalp and for traders who are in it for the long haul. So now I'm going to pull up a chart. Okay. So just to indicate this a little better. Okay. So my yellow line is my 20-day moving average. And this must always be on your chart. Now, different traders play it different ways. And when I'm trading, I will have different moving averages on my chart. But I will make sure I always have this yellow one, which is the 20-day. The blue one is the 10-day moving average. And we're going to look for, I'm going to pull this chart tighter. Let's pull it so we can see a little more of what's going on. We're talking about when to exit a trade. You exit a trade because you already see some gains. And as you all know, you can have some beautiful gains, but you can blink and literally your gains disappear. You can start a trade and everything's looking great and you're up 5%, 10%, 20%. And in a blink, you can be down 15%. So that would end up being a losing trade. What you want to keep your eye on is this 20-day moving average. Now I'm going to show you this point. Right here. Okay, right where we have that rectangle, forgive me. You can see that price action dropped below the 20-day moving average. It so happened to drop below the 20-day and the 10-day moving average. So when price action drops below two moving averages, clear out of that trade, exit. It's over at that point. If it drops below one moving average and you still have another moving average beneath it, maybe there's a chance of a rebound. But right in this rectangle, at this point where this, zooming in even more, this, here we go, right here. Let's tighten it. Price dropped with this candle, this long red candle, out of the trade. Now this, of course, is if you're in a long position. Bear in mind, if you're in a long position and you exit the trade, it's not always a good thing to enter into a short position. But for people who like to trade, like I trade futures as well. I recently kind of picked up my futures trading because of the state of the market. You all know the way the cryptocurrency market is in. people are saying maybe we're not in a bear market yet, maybe we're still in a bull market, but guys, you wake up and it's red. You go to bed and it's still red, and then you have some green action and some increase, and at the end of the day, zip down, everything just falls down. So I would say we're in a temporary bear market with still the hope or the potential for recovery, but for now we're in a bear market, guys, and that is open to various interpretations. So you're going to hear different things when, you know, just depending on who the trader is. But for me, I feel I'm in a bear market, and so I'm focusing more on my futures trading, where I can make money when price is going down. When price is going down, you can't make money all the time, but if you pay attention to the 20-day, the yellow, once price action drops below the yellow moving average, but most importantly, when price action closes, a candlestick must close. So I wouldn't get into this trade until I see this full candlestick, a complete close on this candlestick. Very important. So that's the very first thing. You need a drop below the 20 EMA to exit a long position and possibly enter into a short position. The second thing you want to look out for, the second thing is a drop. Oh, I like this one. A drop below a double top. A drop below a double top. Now, a double top or a double bottom is, I'm going to show you an example of a double top and a double bottom. But I did do a video on that again. So stay on my channel, search through it, search double top, double bottoms, and you'll come upon it. Now, a double top can also be known as an M, and it's going to be an M because we have the patterns creating, the candlestick patterns creating this M shape. Now I'm going to find one on this same chart. So let's go back into this chart and see where I can find a double bottom. So right now we're on the hourly chart. I'm actually looking for a double top. Now, I've had people on my Telegram group, you know, ask me. I get this question asked quite a few times, and I can tell it's from new traders, where they'll say, "Is there a best time frame to trade on?" I've actually had somebody say to me, "Can they trade on the 50-minute, and can they make money on the 50-minute?" Like, can they trade on the 15-minute, and is it possible to make money on the 15-minute? Guys, you can't trade on any one time frame. Like, that's like saying you're gonna eat one meal, one food type, and expect to be healthy. You're only gonna eat breads or fruit and nothing else. There's something called a balanced diet, and that is what we want to be focusing on. A balanced trading style. And that's why we need the different time frames. We need the 1 minute, we need the 5 minute, we need the 15-minute, which is my personal favorite. We need the 30-minute, I will use sometimes, but definitely, guys, the 1 hour. And for the high up time frames, all it is you're zooming out. You're seeing a bigger picture of what's going on. And when you get in close on a time frame, like now you can see me moving from time frame to time frame because I'm trying to find my, what was a double M. And I think I see it right here, actually. So this is, I'm on a 50-minute time frame. And on this 15-minute time frame, I'm going to attempt to draw what I can see looks like a double M. Okay, here goes. We go up, we come down, we go up, we come down. Now that's very shaky and wobbly intentionally because I can't draw a straight line, so I make those lines. But you can see, guys, this is what we call a double top. It's a double top because if we draw a price level, this blue price level, price action tried to break above the blue price level. It could not make it, and it comes down. It goes back up to retest it. Now, when it goes back up to retest this price level, this would be a perfect like a continuation breakout if it had broken above it. But no, it breaks down again. So that tells us that this blue level is a very strong level. At that level, there are sellers, there are selling bots just waiting. As soon as price action comes to it, sell, 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 pushes the price down again. So this would be the worst time possible to enter into a trade. In the first instance, you never enter into a trade. Never enter into a trade at a price level. Never enter into a trade at a line of resistance or support. I'll say that again. Never enter into a long position at a line of resistance. Resistance is this blue line here at the top here, because this blue line is resisting price action breaking above it. So we are not going to go into a trade at this point. You go into a trade and you're going to see this downward action. Now, we want to exit a trade. Let's say we've entered this trade, I don't know, 2-3 days ago, and then we see this M shape. At this point, if price action breaks down below it, comme ça, like this, then let me make it a bit tighter. If price action breaks below the M, it's time to exit your trade. It's time to exit your long position, and it could be a possible entry into a short position. Now, short positions are such that you make money as the price drops. So that's the second thing you want to be looking out for whenever you want to exit your trade. Now, you could have a profitable trade and you exit when you see these two indicators. So you're exiting and you're, with your profits. You could equally exit a trade if you're already in a losing position. And at this point, guys, you want to exit before you increase your losses. And that's why never trade without the 20-day moving average or a couple of moving averages on your charts. Of course, you got to learn how to use them. So I guess I'm giving you work to do over this coming week. Learn how to use your moving averages. Let them work in your favor. The next thing, this is a big one, a death cross. Death cross sounds as bad as it is. The opposite of a death cross is the golden cross, which sounds as good as it is. So you want to exit a trade on a death cross. When you see a death cross on a small time frame, the 1 minute, the 2 minute, the 5 minute, it may not be such a big deal. When you see a death cross, guys, on a weekly, a daily, an hourly, game over. Like, price action is going down over the next so many days or the next so many hours, depending on which depending on which time frame you're actually looking at. I'm going to identify that all important death cross again. So let's go back again to this same chart. This is a Matic network chart, by the way. I'm a big fan of Matic, which is the native token of the Polygon blockchain. And if any of you are into, I'm a long-term investor in cryptocurrency. So yes, I do trade crypto from day to day, but in the long haul, I'm hodling my coins. So the market is tanking, where like price action is going down, but I keep on buying. I keep on buying. I think every week or I think it's once every 2 weeks. I have recurring buys on Bitcoin, recurring buys on some of my favorite coins. Matic is one of them. So price action has dropped below $1. I'm just buying more because I believe in, you got to believe in the purpose of the coin, and not so much the coin, but the purpose of the blockchain. So which is why, guys, there's a lot of studying to do with cryptocurrency. So we're looking for a death cross, and oh, I see two beautiful crosses right here. Here's the first one, and all you need to see is just look at how price just dumps. A death cross occurs when a smaller time frame, in this case the blue, crosses below the larger time frame, which in this case is the yellow. There is a cross below, price action is heading down. The minute you see this death cross, now I'm on a 15-minute time frame right now. So that means by the time you see a death cross on the 15-minute time frame, there has already been a death cross on the smaller time frames, the 5-minute, the 1-minute. But whenever I'm trading and whenever I see a cross of any type on the 15-minute, my game is over. Not for my long-term investments, mind you, because I'm in those for the long term. So just a portion of my investment portfolio is what I trade with. And I hope that's the same with you. If you have $1,000, you don't want to be trading with your whole $1,000. If you have $1,000, you want to be trading with 20% of that or less. So that's just something I learned. I learned the hard way. When I was a new trader, I would have $500 and I'd trade my whole $500. And I would watch that $500 just disappear. I don't do that anymore. And I hope you guys don't. So there's a death cross. And look at another death cross. Can you see here where the blue? Let's increase this. Can you see where the smaller time frame, the 10-day, crosses below the 20-day moving average? Again, what happens after that? Price plummets. So if you were in a trade at this point, you can see here, we can see this nice upward movement here. Yes, and we're making money. And then price action starts coming against you the minute you see this cross. Or it depends on how you, there are different ways to trade. I would have been paying attention to a death cross from the 5-minute if I'm scalping. Just depends. But if for whatever reason, after a death cross on the 5-minute, I'm still in the trade, the minute I see it on that 15-minute, I'm out. It's done. Over. It's not about whether I've made money or not. Just out of that trade. I want to keep my gains, and I want to prevent further losses. So that's the second point. Third point. No, that's the third point. And the last point. You know, I needed to mention this because I only wanted to talk about 3 points. And then I remember that, you know what? All these points are made up of this lower low. So I figured I need to mention the lower low. Anytime you see a lower low, so all that is referring to, again, is, let's go back into the same chart. Okay, so what do we have here? Sometimes when you're analyzing your charts, I'm telling you the truth, it feels like you're trying to solve a murder mystery. You're trying to figure out what's going on. You're looking on your 1 minute, you're looking on your daily. Whenever I'm trading, I'm constantly looking on my daily. Okay, I'm constantly going to my daily chart because the daily zooms out and helps you see what's going on. Well, I do that mainly when I'm trading stocks. Trading stocks is different, a bit different from trading cryptocurrency. Cryptocurrency is 24/7. Trading the stock market is not 24/7, so it's important to check on the daily. So if you're in a trade until the next day, you can have an idea of how that trade is going to go the next day by looking on the daily. Crypto is a little different, but again, like I said, it's you got to know what you trade. You got to kind of home in on what you trade and work it until you have an understanding of it. It's a bit like being in a relationship, and you just got to work a relationship so you can weather the good times, the bad times, the ugly times, and not just bail out on a relationship just because, you know, we're going through a bad spell. Same with crypto. And we are on lower low. So what I'm going to do is, let me come out of this and see if I can get rid of actually I don't, just give me a second. Let me see if I can get rid of this. Yeah, we're looking for lower lows, and right here I have this blue price level again. So I've written here a lower low. So I already identified a lower low. So what is it? From over this huge green candle, we see price action broke above the blue level that I'm calling this lower low. It breaks up, it comes back down, retests the same price level, and this price level is strong enough to push price action back up, and we see whoops, up it goes. Great. Now price action is coming back, okay? And as it's coming back, yes, we have this death cross, and assuming you're still not, you still haven't exited this trade for whatever reason, you're still in profit and you want to just stay in it, or you're a long-term investor. It could be so many reasons why you don't exit on a death cross on any time frame. But when you come down to this point, back, price action comes back to the same level that it broke out above. So this is, looks like 3 hours prior. So it comes back to retest this level. So what you're looking for as a trader, you're looking to see, is price action going to bounce off this level and go back up, which it can do, or is it going to break down the level? Now we see it broke down. So at this point, I'm going to draw another price level. Now the chart starts getting kind of messy the more we put on it, but bear with me. I kind of rely on my colors a lot, especially when I'm explaining things. So price comes down below the blue price level with this big red candlestick. And we have 1, 2, 3. So 3 candlesticks where price does not break below the price level. On the 4th candlestick, this long one, price breaks below. And right there, we have a lower low. I'm going to show you that lower low with this trend. Where's my trend indicator? Here it is. This would be your lower low from here to there. There you go. Let's draw that out. Okay, so now we have this trend line, and price action has broken with this candlestick. I got a lot of markings going on here. With this candlestick, this is the one. There's the bad guy. Price action has broken below the green level. It's created a lower low. You want to be out of the trade. And that is it, folks. That is it. 4 reasons why you want to be out of your trades whenever you see these 4 telltale signs. Now there are more, but I just wanted to home in on these ones because these are some of the ones that I look out for from day to day when I'm trading. And I think we can go over to questions now. Any questions? So two things I want to reiterate is you always have to have your understanding that the higher or the larger the time frame, the more weighty are the indications that you see on your chart. So if I see a death cross on a 1 minute, it's not as bothersome as if I see a death cross on the 1 hour. So the 1 hour, I'll pay more attention to that. So you're looking at all these things to determine to enter a trade or not to enter a trade. I've mentioned these 4 points to help you identify when to exit a trade, but it works the same way to enter into a short position. If you're short trading, if you're trading futures and you want to make money on the dip, then you want to be looking out for these signs as well, because yes, they help you exit your long positions, but they also give you a good indication of whether to enter into your short positions or not. So Ben Malky says he does not use moving averages when he trades. I hope from here on you will do a study on moving averages and put some of those you will not see any of my charts without moving averages. That if my charts have no other indications, no MACD, no RSI, no nothing, they must have my moving averages. So do that from now on. At the end of the day, as traders, we want to be able to improve our win-loss ratios. You will not find one trader out there. If you find a trader out there who tells you he's never had a loss, then just move away from that trader completely. Move away. Don't, unsubscribe. Forgive me. Unsubscribe from the channel. It's not true. You will always have losses. There is no way you will win. What's that? That doesn't happen. All you need to do is look at the chart and see ups and downs. There is no way you're always going to win. You will always lose. But the mark of a successful trader is someone who can reduce his losses and increase his wins. And that's it. You want to reduce your losses because you will have losses. As a new trader, you'll probably have more losses. I'm sorry to disappoint you if you're newer into this whole trading scene. You will have more losses than wins. It's because there's so much to learn. But once you can just begin to implement one more thing and one more structure to your trading style, then slowly over time you will begin to increase your wins and reduce your losses. If you have any questions, now is the time to put those questions in that box. Oh, and I like to say this, and I always forget to say it. Hit that like button. Yeah, I always forget to say that. Hit the like button, especially on live streams. It's apparently meaningful to YouTube, the YouTube algorithm, to see those likes and those comments. So please do that for me. Hit the like button. If you haven't subscribed to my channel, do try subscribing to my channel if you're interested in improving your trading strategies. What I do on my channel is basically things that I have learned, what I have learned that have helped me become more profitable as a trader. I still have losses, but I have reduced my losses compared to the kind of losses I used to have when I started trading. Give me $1,000 back when I was trading, I'd blow it in no time at all. Not intentionally, but meaning well, I'm entering into trades, I'm losing, and then I pick myself up with what's left and I enter into another trade. I may win, but on the third trade I'm losing again, and at the end of the day I just kept on blowing through. I blew through so many accounts. But now my story has changed around a bit because you just have to support your trading with different strategies. Any more questions before we call it a day? I want to appreciate you all for spending your weekend with me. I hope you have taken something away from this session. I would like to hear from you. You can join me on my Telegram group. You can get that from any of my videos. Join my Telegram group where you can directly connect with me and a bunch of other traders as well who are just trying to get their trading acts together. We kind of glean from each other, we learn from each other, and whenever you have a trading question, you can get your questions answered, pretty, I won't say instantaneously, but pretty quickly. So if you haven't joined that, subscribe to my channel, join my Telegram group, and I hope things work for you. I hope things get better and better. So with that all said and done, I want to sign out to give you wonderful people time to enjoy your weekend. And after you've hit the like button, you can sign out. And I will see you same time, same place